Hello, everybody. It's Sunday, and thank you all for joining. This is the time of the week where we take all the questions from Patreon from the week, and it gauges a sense of what people are thinking about, what they're worried about. And let's just jump in. And I apologize as well, a little bit. Not, I'd say I'm 99.9%, but not 100%. So thank you all for coming. So excuse the weird voice today. We're going to talk about Bitcoin, FUD, spot ETFs, manipulation, Bitcoin heists, some blasts from the past, how to trade, whether tax-free or otherwise, and how best to do it. We'll look at a couple of layers, a couple of tools, and a whole bunch more stuff. Oh, how Bitcoin price can be manipulated too. So these are all the thoughts. A big focus as well is on what people are thinking about now is right now, I think we are $300 away from 40,000. We are way higher, way earlier, same for a long time. All the signs were saying that, but now people are getting worried. They're already thinking about profit taking, which is awesome, but it's way too soon, way too soon. So don't be premature on getting out of positions. So let's just jump in. And of course, this is not financial advice; it's edutainment. It's just what I would do and what I do. And also, for those of you who are offended by data, we do data here on this channel. So if you don't like data, it's probably not for you. Just sharing that right now. Warning in advance. And thank you as well for all the questions on Patreon. This is where you can ask them, the investor tier or above. And thank you for the great questions every single week because they make me dig and make me work hard. So the very first question is from Jimmy the Kid. Can you help with my exit strategy? My equities are 52% GBTC, 31% Tesla, 9% miners. Goal is to harvest gains equivalent to 50% of my current bag in this bull run, but leave enough on the table to continue to grow and eventually retire by the end of the next bull run, 2028 to 2030. Is this feasible? If so, how would you play it? Well, so far this year, we've seen many things go up 500%, 600%, 1,000%, 1,200%. It has been absolutely crazy. 2023, as usual, as I said, if you watch the show back in very beginning, actually on the 5th or 6th of January, I made a show that if the first 5 days in the stock market are good for the year, it says things will be incredible. And boy, they were. But crypto has also been a real surprise. We knew it would be good, but not this good. So let's break it down. Let's show you. I'm not going to break down your positions exactly, but I'm going to give you tools so you can do it yourself because that's what we do here. We teach you how to fish. I'm not going to prescribe what I do. So first of all, there are some things you need to address yourself. This is for anybody out there thinking about this. When it comes to who you are, what you do, I know nothing about who you are, what you do. All I know is you want to retire. Hey, Mr. Mike, good to see you. But you got to look at your risk tolerance and your time horizon. You seem to have that 2028, 2030, which is good. But how much risk can you take? That's also important. Also, you got a pretty high concentration GBTC, which is doing well now. the discount is nearly gone, which is awesome. But your exact time horizon, how much you need, your diversification strategy, a little bit heavy again as in GBTC. Miners is very risky. You really have to time those investments. And what are your income requirements and how much do you have now, etc. It's very, very difficult for me to ascertain that here. Also, tax implications. What are your implications based on your intended sell-off strategy? If you are in, say, certain states, I won't mention any, but you could be paying 43% federal tax plus 13.3% state tax. And that's a big chunk, which does impact your net returns and plan accordingly. So these are some things that you have to take into account when you go down this path. Next, what I'm going to do is give you some advice regarding Tesla. Tesla is one of the few things that I would not layer out of or take profits in because the future is getting bright and brighter and brighter every day, despite it being the most hated stock, the most shorted stock, the most widely traded stock. It is despised by Wall Street because it's a threat to the system, and they don't like that. But this is why I believe Tesla is a keeper, and I stack accordingly. And you see me do that for for a very long time. In fact, since December last year, December 2022. But I believe It is a keeper because they have so many revenue and profit lines that are coming. I mean, they have cars, they have semi trucks, they have FSD, they have Megapack and Auto Bidder. The Megapack and Auto Bidder business itself is worth $1 trillion, in my opinion, today. that's that's far less. That's far more than the current market cap of the entire company. Then they got insurance. They're going to do a lot more of that as well. No company on earth has the type of insurance they need to be able to price insurance based on the risk profile of the actual driver. Then they got their superchargers and the hardware of the superchargers that they're selling to oil companies now who are pivoting to EVs. You got your robotaxi, you got your bots. That's probably the single most important line item. Then you have your dojo and compute as a service. That's a whole separate issue. You got your solar and pump. That'll be huge as well. Then you've got fleet AI inference. I'll be talking about that real shortly coming up as well. And then you have the fleet, media, entertainment, app store, etc. There's just so much coming. You know, your time frame of 2028 to 2030, you are going to see this thing melt faces. And I don't guarantee much, but barring any severe black swan, that's what's going to happen with this company. Nothing comes close. I've been preaching that for 3 years now. Now, I do hedge on gamma squeezes. It's the only time that I would kind of not take profit, but protect my position. So let's look at Bitcoin, switching gears because your GBTC. So instead of looking at GBTC, because the discount has depleted from 50% at the beginning of the year to 8% right now as we speak, it's a bit misleading to look at layers. So we'll look at the mothership, which will determine where the price is going and where to take layers. And I'll show you some strategies that you can use. One, this is what we built for profit taking, and it's also good for layering into layers as well. This is the layer out, layer in model for Bitcoin. And what you can see here is a bunch of different layers from where we are today. Now, for giggles, we're going to talk about some of those layers, but it goes all the way up to about $90,000 and change. Now, one thing that's very, very important. We are facing very surprising times. The hardness is like never before. The supply has never been so thin. The long-term holders are holding their bags hard, and we have a huge influx of money coming in. So this $90,000 target could be blown completely out of the water. But then again, you don't go broke making profits. And your plan of keeping half and selling half in layers, we're going to walk through right now how I would do it if I was in your situation. Now, not financial advice, of course, but this is the model that we shared. In fact, the updated December model was shared on Patreon. It's what I call my Bitcoin or my profit taking model. It can be worked for crypto, anything you want. It's pre-configured for Ethereum, etc., with a whole bunch of different strategies. So what I have here is per the layer model. We have 6 layers. We have layer 6, 43,000, which you're very close to right now. I would not sell at that layer because it's going a lot higher. Layer 7, 52, layer 8, 66.6, layer 9, 81, and layer 10, just above 90,000. Now, per your strategy, what you could do here is sell 10% of your bag. Okay, that's the value of your bag at these layers. Just hypothetically, this is a hypothetical model. You can figure yourself, you can plug your layers in, you can use the model, you can tweak it how you want. But here you can see per each layer you're selling, first of all, imagine you have 1 Bitcoin to start with. You are and your cost base is 20,000. You're selling a tenth of it first, and then 0.09 second, etc., because you're selling a piece of your original bag position, and it aggregates your total sold amount and then your total balance, cash and Bitcoin balance. So the key thing here is, if you did implement this, what you have is your total balance, cash and Bitcoin goes to 80,000. If Bitcoin shot to $90,204, you would be, your opportunity of profit taking is only $10,000, which is kind of stunning when you realize people think, oh, I'm going to sell at the very, very top, but you don't lose much by taking profit on the way up. That's the math behind this. A visual of what this looks like as well is here. You can see the total sold is in blue, shows you the amount per layer. Red is the value of Bitcoin remaining because you will be keeping half of your Bitcoin bag but selling in 10% increments. And then your total pie afterwards, your total Bitcoin cash. Now, there's another variation too, and it depends on who you are, what your profiles are. You can change the percentages as well. You can sell more upfront, less upfront, depending on who you are. But this is settings of selling 50% of the initial holdings, okay, with the model. So I have the wrong screenshot there. Ooh. That should be, it should be 0.1. Anyway, the correct model is on Patreon, but it's slight variation on this. And you can see you leave a little bit more on the table by selling exactly 10% of your Bitcoin all the way up. This chart, however, is correct. This is with 50% sold. What you get, in fact, total balance of cash and Bitcoin is 78,439 if you sell in 0.1 of Bitcoin increments versus 79,512. So you have, that's the difference, 512, 100 or $1,000 more, approximately $1,100 more by those two different variations. So model it out, test with the spreadsheet that I built for you guys, and see how it goes. So hope that helps. And again, you need to do it for all your assets and take into account as well all of these different factors, because I do not know the answers to all of these. Risk tolerance, kind of know your time horizon, taxes, etc. They need to be taken into account very carefully. Next question. And this ties back into the previous one from Mark W. What are the best tools for profit taking for different trading styles? And what I'm going to do is the best tools for these different trading styles, because we covered profit taking. But if you are mostly a buy and hold investor who only wants to sell during extreme overbought scenarios, if you do 1 or 2 trades a month for modest supplemental income, or day traders looking to replace income. So, excuse me. These are 3 very distinct circumstances. And what we try and do is build solutions that help decision making for all different trader styles, whether you are a scalper, a day trader, swing trader, whatever. So for the extreme outliers, the extreme overbought scenarios, we've got 3 different things that do that. One is the LILO model that we showed, the ATR model, which is what I call the augmented trading range, and you can see exactly when things are bubbling up to the very top. And then mean reversion, which is part of IDSS, that shows you as well when things are completely overbought. The 1 or 2 trades a month, you'd use the ATR, the augmented trading range, and day traders looking to replace income, you need IDSS. It's that simple. They're the 3 ones. So I appreciate the question, because some people don't know what their style is. You obviously do, and you know what you're looking for. And there's no problem as well combining all 3 and measuring what works best for you to determine what your rhythm is. Like you always stress that, find your rhythm, find what you like doing best. My thing is, I'm kind of a swing trader. I do some short-term trades, like bit farms this week, which was kind of insane. And but mostly I like to wait for those opportune moments and then take advantage and go in hard, and in a very leveraged way using options. Next question. This is from Aloha State of Mind. I love that name. With all the positive news and tailwinds for, excuse me, Bitcoin heading into the halving, can you play some devil's advocate and come up with some potential ways the big boys like BlackRock and companies can suppress Bitcoin while they stack? Yes, I can. There's a lot of ways in which they can do it, but I'll cover the main ones. And this is stuff that also happens in traditional markets like the gold market and other areas. So first of all, step by step, big list here. They can manipulate Bitcoin futures. What that means is they can take dominant positions in Bitcoin futures markets, and institutions can influence the spot market price. So if you see somebody getting into a huge short position, that can rattle the market and scare people out. For example, it could create the perception of a bearish future for Bitcoin, and it could cause retail to sell their holdings at a lower price, which institutions can then buy. Sometimes this is called kind of spoofing as well, not with options, but in other ways you pretend to do something which you don't actually do it, and that rattles retail. Especially with the speed of information these days, it can happen pretty fast. And we've seen that a lot lately as well. Next is market manipulation through very large trades. Big institutions could execute significant sell orders to artificially drive down price of Bitcoin, and the increased sell pressure can create panic and a cascading effect. We see that with whale manipulation all the time, and leads the retail to sell at a lower price, and then institutions swoop in and grab your bags. The good news is, though, people are getting smarter to this right now because it's so scarce. Any dip is bought up. We still have people out there. I was communicating with somebody last night. They're saying, "Oh, I can't wait for 30,000 again. Then I'm going to go in hard." I said, honestly, based on chain, we'd be lucky to hit 35 again. So there's people still there waiting. They were waiting for 10,000, and then I went to 25,000. Then they're waiting for 20,000, and I went to 35,000. Then they're waiting for 30,000, and they're never going to get a fill. So the key is you need to have a strategy. Just like profit taking, same thing. Do the opposite with the model. Identify your layers. Snipe. Layer in accordingly. That's key. Third way is coordinated action with other big players, and collaboration or unspoken coordination between large institutional players could lead to synchronized market actions, and the coordinated effort could be very effective in driving markets in a certain direction which they want. Now, this is related as well. This third point is related to another point I'll touch on very shortly after this, because it's directly coordinated. So remember that. Coordinated, excuse the pun. Coordinated action, yes. And then spreading FUD. This is what Twitter is. It's, a lot of FUD is out there. And institutions might leverage their influence to spread negative news or exaggerated concerns about Bitcoin, or say, oh my God, FTX is going to sell, or oh my God, this is going to happen, or Binance is going to go bankrupt, or Tether is going to do this, etc. This is all FUD. And you learn after years and years of watching this, hearing it, and seeing the markets do the opposite, then you learn to ignore it. And that's important. That's why it's called FUD, fear, uncertainty, and doubt. And you have strategic public statements. Influential figures in these institutions or even regulators can say certain things or predictions about a downturn in Bitcoin's value, or a new tax law or regulation or whatever that could scare people. Again, this can sway market sentiment. Then also utilizing derivatives, using complex derivatives and financial instruments, institutions can exert downward pressure on Bitcoin. And also, in the same way, they can minimize their risk exposure while messing with the market. And this can use options or futures or etc. Create short positions that drive down the price of Bitcoin and then cover very fast. Also, OTC markets, leveraging OTC markets, big players could use OTC to quietly accumulate Bitcoin. And these transactions are less transparent and have less immediate impact on market prices. And this is what's been happening, I believe, for the last 5 or 6 months. They've been quietly maybe buying OTC directly from miners. That's why Blackrock owns big positions in all the miners right now. Sailor, how he buys, he doesn't go to Coinbase and place an order. He uses OTC facilities to make that happen. So a lot of that is definitely happening right now. So that's kind of how it could work. Now, point number 3 is related to this. Now, this is a great question from Fish Lizard Man. CZ timing seems suspect with ETFs around the corner. Could this be an indication that the powers that be want to eliminate central exchanges, forcing the general public to use upcoming ETFs to have Bitcoin exposure? So, you're dead right. There's no doubt. Some kind of random thoughts from me. My thoughts, I have shared some of them before, is there's no doubt that the Department of Justice officially owns Binance US, and they probably didn't want to approve a Bitcoin spot ETF until they could remove CZ and other nefarious characters from the market. And I also believe the Department of Justice has the goods on CZ, therefore forcing him out, forcing a big fine, anything to avoid jail time. A lot of deal happens behind the scenes, deal making. And for BlackRock to be in control, all dodgy characters need to be eliminated. Probably pretty clear. And yes, it did clear the way for the spot ETF. We have the other guy, the what's his name? Do Kwon, also being taken care of. So all the nefarious characters are quietly being eliminated. And don't underestimate the power of the US justice system. They got claws at everything. So you don't want to be an enemy of that group. And P.S. BlackRock is embedded with Coinbase. So that means, not all centralized exchanges are going to be hurt. Some are going to survive, but they'll be handpicked, probably by the government players. So I do believe in your conspiracy theory. I hope that helps. Thank you. The next question is from AdRoom888. Is it too early for me to cut my small Fantom bag? Yes, I saw the comparison of Avalanche versus Fantom and the outcome, but don't see it moving anywhere despite the recent returns, and it does not seem like a fast horse to me, so let's not talk about the bull market. You're right, there is something happening behind the scenes, and there's what I've been calling the black hole, black hole, black hole, and now I call it black hole sometimes. So all money is flowing into this new structure, this new consensus trade. Last time around it was ETH and ETH related projects. This time around it's Solana and Solana related projects. They're grabbing all the money, and you see that very clearly. If you just pull up a pair chart of Solana versus anything, you'll see it even beats Bitcoin. This is Solana versus Fantom over the year to date, and Fantom's been up quite a bit, but Solana's still more than 4x the performance of Fantom. Up return is 300% on this investment. So the question is, do you want to hold Fantom? No, get out of things that are going to be second best. Always play with the winners. Sometimes investors think, oh, yeah, this is another, say, electric vehicle company. It's much cheaper than Tesla. I'm going to buy that because it's cheaper. But that doesn't get you the returns. Always, always, always pick the winners. Remember the 1%, 2%. Forget the 99, 98%. Always very important. And in full disclosure as well, I've been dabbling, and I'm not a degen, but I do believe some of the newer Solana ecosystem tokens are super interesting. And now I have positions in two of them. And we'll talk more about another one as well that could be coming up too. But it's all about relative value compared to some of the existing incumbent players. There are sometimes there could be a new BEV player that's better than Tesla. It doesn't exist yet, of course, but maybe one day there will be one. And that's what you look out for. So let's go to the next question. It's prime time. I've seen a lot of conflicting opinions on this. Are Fed rate cuts good or bad for crypto and stocks? YouTubers like TXMC, alphabetasoup, and George Gammon provide historical data for the last 100 years of previous recessions that essentially the recession begins once the Fed begins cutting rates. And it's only a period of time later when the yield curve reinverts and that the market begins to suffer and find its way to a new bottom. Yet most of Twitter seems to think cutting rates is bullish. So this is so interesting, and I'm going to use the most dangerous words in the investing language. This time is different. Remember, we came from a zero rate environment. We've never come from that before. Therefore, you can take all your history of inverted yield curves and potentially throw them out the window. It is important to look at, but remember, you have to look at where we have come from. Zero rate environment has never happened before. That's why these numbers can throw people off. So let's talk about, I did look into George Gammon a little bit. I must say I'm not that familiar, but I checked out a video he was on with Kitco News. And literally, if you watch this, the other one as well, sorry, I forgot to mention, I don't know alphabetasoup, but I did look at this video. And George Gammon, he highlighted the yield curve inversion, like I just talked about as well, and his conviction that a black swan event is on the horizon, most probably in 2024. He also said possible triggers like China collapse, World War III, a huge global real estate crisis. All of this terrible stuff is happening. And when you watch this video and you've got no other point of view, you probably want to run away, hide in a cave, move everything to gold, or jump in a boat and just find a deserted desert island somewhere in the Pacific, because it's kind of terrifying. All right. So be careful where you get that. I mean, if you look at, I also looked into Kitco News. It appears to be a gold bug channel, and they simply all the videos that they have are there to terrify you. Again, to terrify you to buy gold, maybe. And you guys know I don't like gold. I don't like assets that don't perform. I don't like assets that go down against money supply over time. And gold has been a horrible performer. And you'll hear talk of it making a new all-time high, but it's basically flat for the last 12 years. And when you rip out debasement of the dollar, it's half of what it was 12 years ago. This is the stuff that people don't get, okay? Divide everything by M2 growth, then you have your answer. So as far as I'm concerned, I'm going to break down the impact on crypto and then the impact on stocks as I see it. And I've been looking at this for a long time. So first of all, cryptocurrency, it does have a lot of enhanced effects for cryptocurrency because there will be enhanced liquidity. When the Federal Reserve cuts rates, they will probably increase financial market liquidity, which will mean increased lending, etc., lower borrowing costs, and it'll make it easier to trade crypto. And also, these cuts will reduce borrowing expenses, making it easier to do margin trading, margin-based cryptocurrency purchases more appealing. Also, more institutional investors, if there's a dovish Federal Reserve stance, that might attract additional institutional investments into cryptocurrencies because they won't be getting the high rate they're getting right now. They'll need a way of generating more yield with things like Ethereum, and that will probably happen. Now, the negative effects, if rate cuts are in response to economic weakness, this could impact cryptocurrency values because people are afraid, people have no money to spend, etc. Also, regulatory risks could impact people as well. We don't know where this is all going to go. We do know some weird stuff is happening. So I'm going to summarize both this and equities in the final slide. So hold on one second. Let's talk about stocks real quick and what I see. I see, first of all, positive effect for stocks. When the Fed cuts rates, it will enhance liquidity just like before, facilitate more stock trading, reduce borrowing costs, etc. Like I mentioned before, will uplift stock prices. Also, it could boost consumer spending. Rate cuts will increase more consumer spending and increase corporate profits and stock values. Now, the rate cuts, this is the negative stuff. The rate cuts in response to a weakening economy could reduce corporate profits and stock prices, but higher inflation as well could diminish investor purchasing power, which could be a ding on stocks. But really, this is the way I view the world. The conclusion of everything. All right. So, and this is from looking at markets for nearly 3.5 decades. This will be a positive for disruptive stocks. No doubt about that. This will be a positive for high beta stocks. No doubt about that. And while I mentioned those two categories, if you look at the S&P 500, it's been driven by 8 names. The other 492 have gone nowhere. Many of them are just very close to 52-week lows. So think about that. So again, high beta. They don't do well in increasing interest rate environments, but they do very well when rates fall. So, and that's what we care about on this channel. Also, it's positive for crypto. Institutions will be seeking alpha. We're seeing that right now with the move of Blackrock, not only with a spot ETF, but also with an ETH ETF coming fast right after. And that shows you what institutions want. They're done with the bond market. They need an alternative. And also, as I've said many times, by the time you see governments saying we are in a recession, we are a long way out of it. Because imagine the economy is going at 100 miles an hour ahead. The government's looking at data 6 months old, 100 miles back in the rearview mirror. So that's the key thing. So the way investors think, it's just mind-boggling. They talk about history and 100 years of history. Analyze it carefully. And I do believe as well, we did have a tech recession in 2023. You saw all the layoffs happening at big tech. They are the canary in the mine. They had all the huge layoffs end of 2022, early 2023. They had a pretty rough year, stagnant growth, but now growth is growing again. So I do believe we've had the recession already. I do believe there'll be another one. And I also believe that 18 of the 50 states in the US had a recession last year as well. But the government doesn't report on that stuff. Okay. So again, be careful with government data. It's a positive for stocks and they will go up. You can save this video to prove that. Next is from Scalapaloo. Assuming the three-legged stool is still in place, you still have real estate, Tesla, Bitcoin, SOL, etc. What would be your strategy in the current market if a bag of money was suddenly dropped and that was 10% of your net worth in cash? Okay. Comment below if anybody would like a big bag of money to just land on their lap. It would be kind of fantastic. Would you deploy quickly as you expect the bull run to continue, or are you setting some traps and you might expect a dip? So my plan would be is not buy real estate because we are in this exponential time. I would go hard into 2 items. I'd go hard into consensus crypto trades like Bitcoin and SOL that you mentioned. And I'd also buy some of the most undervalued AI stock, Tesla, because that's going to pop. And then after these things pop, you can part of it, you can take profits, and then you can redistribute those into real estate for your three-legged stool. That would be my plan. In terms of dips coming, again, like I mentioned at the very beginning regarding Bitcoin, people are hoping, they're praying for a black swan. they're actually rubbing their hands together and say, oh my God, there's a pneumonia in China. That could be our new C19. hitting right in time, just like it did back in 2020. But it's not. It's not. So again, don't hope for a catastrophe to determine your investing plan. All right? That doesn't work. Hope is not a strategy, which I've also said many times on the channel. Next question is an interesting one. To Jebby, could Bitcoin, 140,000 Bitcoin held by EOS, be extracted and unlocked to EOS token holders? Well, wouldn't that be fantastic? Let's break down EOS and the situation with, again, data and truth. So EOS is another ghost chain. When I say that, I look at data and I determine the activity and I determine all the metrics, and that tells me if something is a ghost chain or not. I did that recently, and I caused a lot of feathers to be ruffled. But again, it's data, and the data doesn't lie. This is the amount of daily active users on EOS, 2,894. That is pitiful. Pitiful for a chain that's been around for what, 8 years or more? I can't remember exactly. Again, the chain itself is not going to go anywhere. That's pretty clear. Also, the technology is dirt old. Now, in terms of EOS themselves, where they are right now, there are issues regarding ownership and control of assets, and the main consideration is who controls the Bitcoin held by EOS. And then obviously it's the whatever group that do it, and they don't do it for the love of you as a retail investor. They do it for themselves. Then there is legal and regulatory compliance, and any action to distribute, for example, Bitcoin to token holders must comply with legal and regulatory standards. And that would be an extremely difficult thing to pull off. And also technical implementation. How do you distribute Bitcoin to EOS token holders? Would require a mechanism for accurately allocating and transferring Bitcoin to a diverse and huge number of holders. And that would be a huge tech challenge as well. So net, I doubt it would ever happen. EOS is another one of the zombie coins. And many people say EOS was nothing more than a Bitcoin heist. Take money from an ICO, buy Bitcoin cheap, and hold it for yourselves, leaving the retail investor out in the dark, which is what happens, which is why we make content here to help the retail investor. And believe it or not, I can't remember the magazine that called EOS Bitcoin Heist. It was one of the top ones. Google EOS Bitcoin Heist, and you'll see it. It's like Bitcoin Magazine or one of these guys. Anyway, there is actually, interestingly enough, a movie called Bitcoin Heist. It's actually a movie. I was looking up the term Bitcoin Heist, see if it existed. Well, it does, and it looks like it might be a Vietnamese movie based on my interpretation of the language on the movie. So I have not seen it, and it's not a movie recommendation. Unless, of course, you like Vietnamese movies. Maybe it is. But that would be a fun one to watch. So hope that helps. So again, hope is not a strategy. Do not wait for Bitcoin to be rained on you as an EOS token holder. Get rid of zombie stuff. The world has changed, and the world is changing at an ever-increasing pace as we go forward. Please, please, please remember that, everybody. Do not hold stuff that is redundant and old. It's not going to go anywhere. I did warn you about the data too. Next is from Begrime. What are your thoughts on Centrifuge CFG token? Centrifuge is one of those lending tokens, and lending is a crowded space. So let's again look at some data and some metrics. First of all, here we are. This is the distance from all-time low, which is up 50,368%. That's pretty incredible. So it must have come out at like fraction of a penny to bounce to where it is today. First thing. Second, one of the things I do not like is when I see the organization and founders get 2/3 of the supply. Woohoo! You know, that's what they call a money grab. That is not fair, okay? And remember, many of them are, I haven't analyzed the wallets or how much the top 100 own, but you can imagine, unless they've dumped it all in retail, it's probably quite a lot. So that would be a red flag for me. But again, if you guys like your insiders to have all the tokens, that's your choice. That's your prerogative. Next, we'll look at where they rank in terms of the crypto compendium score. They rank 8 out of the 20 lenders that we have here. Aave is top. Compound is second. Again, they're up against a very competitive space. Now, that being said, the CFG chart looks okay. It's come off the ground. It's bouncing. That's been very active lately. And typically what retail investors do is they watch things that spike and then they get excited. But you got to be in before things spike. And speaking of spiking, this is insane. Also from the Crypto Compendium, you can see here, these are the lenders, and some of them have really spiked a lot over the last few days. At the very bottom, what I did was I stat ranked all the lenders by market cap dominance. So the smallest market cap of them all is a thing called SolEnd, which happens to be a Solana ecosystem play. And the other one that is GNS is Gains Network, which is another interesting play. But if you look at the volume of these things, 134.22% of the market cap was traded in the last 24 hours, and 178% for Gains Network. These things are actively traded, and so is Liquify, 65% of volume. That's huge. And if you look at the Centrifuge, the volume has disappeared, down 40%. Follow the volume to understand exactly what's hot or what's not. When the volume, got to be there again, kind of if you can, before it spikes. But when you start to see the volume dissipate, that's a bad sign for the asset appreciation going forward. Not saying it won't, but I'm saying if you're in Centrifuge, there's better places to look at. Look at a whole variety of factors, look at the chart, look at the technicals, look at the fundamentals, and identify if it is in demand. And then look at it on a relative basis to other assets, how much it's used, and is the market cap justified? Or can you buy something at 1/10 of the market cap that does more business? That's what we like to find here in crypto. So I hope that helps. Not dinging it, but there's certain things I don't like. In particular, this one. All right, that leaves a bad taste in my mouth. Next is from Nout. I really liked your comparison between ICP and SOL, but looking at the website of ICP, the transaction data is completely different and the on-chain seems way more active. How do you look at this and what data sources do you use? We use multiple data sources, all public information, and this is why it costs a lot of money every month to feed this beast. This is all real-time data, and this doesn't come for free. You got to pull 69 different data points from a whole bunch of different APIs, which often cost money. So let's look at your question here. The first thing about ICP, which I think is kind of dodgy, and last week when I was asked a question about ICP, I don't like asking these or answering these questions because they trigger the ICP bag holders. But I did warn you about data. But let's dig into some of the data you're talking about. I went to the website. Many ICP transactions or for zero ICP value. So what the hell? What's the, how can a transaction just be a transaction without moving any value? I share you nothing, you give me nothing, but it's a transaction. Okay, fair enough. Let's move on. All transactions are under 10,000 a day. This is from the website, actually from the website. Total number of ICP transactions to date, the ICP volume. And there you can see on the right-hand side is the actual daily transaction volume. You can see very rarely does it go above 10,000. And we pull in all data from multiple APIs and we verify it. And if you compare this sub 10K daily transactions to our profiler, which is exactly what I said last week, the daily transactions are 9,628, which actually is higher than what it is right now at this entire moment in time. So and just to make sure you guys can see that, it's a bit small. ICP is an interesting case because the live transactions per second don't seem to match their total daily recorded transactions. And the reason for this discrepancy is unclear, but like with other chains, we rely on total daily transactions reported by multiple official data sources for comparison purposes. Data wins, and our data tells the story. Again, I would question this. Zero value transactions. Interesting. Anyway, wait till you see the ICP army in the comments. Lose their minds. Again, check your biases, everybody. I did warn you about the data. Let's go to Donut Jungle. God, I love these names. And a quick reminder, everybody, never use your real name on the internet. Use a fake name. Okay, very important. So shout out to Donut Jungle. Is it better to use a tax-free stocks and shares in an ISA for swing trading with iSuite, or hold pure form crypto, given the 20% capital gains tax in the UK? So ISA is like a superannuation fund, I think, excuse me, in Australia, or 401k, IRA, or whatever the equivalent is in different parts of the world. It's where you park money and you can't actually take it out until you retire, till you're like 65 or whatever, without a penalty. Now, my case, I'm a little bit different. I'll explain why again in case you missed it. I do think differently. And first of all, um, if I was in a tax-free jurisdiction, I would trade like a demon, like where Raoul Pal is. Now, I've always been skeptical about retirement funds for two main reasons. One, given that both my parents passed away at the age of 65, I had doubts about reaching that age myself. And I knew I could generate significantly more wealth independently without being constrained by rules, restrictions, and less desirable assets, etc. Using my strategy, I can make infinitely more than I ever could in a retirement account. Plus, you don't want money, it's nice to have money when you're 65, but if you can make a lot more money when you're young, build positions in certain things like real estate and other assets, it's a lot better over time. So the quick answer is, again, if you're not like me, tax-free accounts are better for aggressive swing trading. However, I don't know your situation, like the question up front. I don't know what your goals are, how far you are from retirement, how much you need, etc., the tax situation of an ISA, the penalty if you do withdraw, etc. But if you are an aggressive trader and you do want to build a bag, tax-free is the way to do it faster. If your goal is to collect when you retire, if your goal is like me, to have it when you're 30 and then make life-changing money for 20, 25 years, that's different, and that's up to you. Also, you never go broke paying taxes, and 20% is not too much in the UK. My strategy would be very different short-term trading if I was only paying 20% capital gains on assets. It would be revolutionary different. So that's not too bad. And remember, you keep 80% for yourself. So I'd eat the 20%. And also, there are people using a thing called pair trading on steroids, and folks are making 50% to 100% a week in some cases, playing with fun things like solve 3x leverage up and down all the time. And it's a fun game. And our favorite part of the week as well. Thank you everybody for helping donations and the team behind finding these great people, great animals, great people finding great animals to sponsor. Kobong is a slow loris, very cute, but was rescued after suffering electrocution. I won't read the rest of the details, but now in very, very good hands, thanks to you all. And don't forget to subscribe to amplify your knowledge. Sorry about my voice being a little bit off today. Now I'm going to do some live questions from the team here. Bitcoin, 39,600, 400 bucks to go. We got within 200 bucks a few hours ago. Let me take some questions now. Team Justice for All, what are some good hard wallets and ledger updates? So wallets are very, just like trading styles and everything else, wallets are very user specific. It depends on what you have, how you want to store, etc., what your strategies are. And it's incredibly difficult. Now, beware as well. Beware of the wallets being pumped by different channels. Some of them may not be good. We have literally reviewed pretty much every single wallet you can imagine. All the comments. Just go to Google, search Invest Answers, look up the wallet name, and we've done a review. And we'll tell it straight. We'll tell you what we look for, what we like. We have a wallet expert on staff here, and we can identify the good ones from the bad ones. But check out the security and wallet playlist. Everybody should actually do that. In fact, this channel has scores of playlists. So if you're only interested in one thing, you can find out all the content you want that's in that wheelhouse. But remember, it's a very personal thing, and it's too long a question to answer here. But it depends on what you have, your operational security, ease of use, your technical proficiency, all that type of stuff. Next question, Graph Web. Thank you for what you do too. Thank you for being here. Solar, Bitcoin, and coffee. Hey, you're tuned into the highest alpha channel on the interslices. Show love and donate to the animals. I used Turkey Day to orange pill my extended family. Did you? Well done. Thank you so much, Solar. You are so kind and great and wonderful. And Piper, you rock too. Ramiko, I have a heavy bag in DOT. Time to cut or wait till DOT 2.0. I haven't been tracking DOT 2.0, but they are going to fix the whole parachain thing, from what I understand. I'm not a fan. I need a chain to be adopted. I need it to be the best, cheapest, fastest. Can they beat the black hole? I doubt it. And it's very difficult to, this is the black hole sun, as I refer to it now. It's very, very difficult to play catch up, especially 11 months, 12 months into a bull market. People are kind of set in their ways. They've adopted their technologies and they kind of stick. The time to build was in the bear and the time to grow adoption was in the bear, not now. I think, especially if you look at the Polkadot performance, and it always astounded me because they always had so much development activity. Well, what are they doing? I don't know. We haven't seen that value yet. And until I see a massive spike in adoption, I would cut, not financial advice. And then you can always go back in, ride a horse, ride a different horse, jump back on the horse if you feel data is beginning to move. So that's what I would do. Aaron Sharma, how can we learn your techniques on options? So I do a lot of exclusive Patreon videos on option strategies that break down all my trades. Also, I have options playlist, and that would be the best way to learn. But I've been playing with options for uh, probably a lot longer than most people is their age on this channel and watching right now. It's been playing with financial instruments for 34 years. So, and I'm aging myself, but it's fun. But it's like second nature to me. And I would not be here in my position if it was not for options, not only to manage risk, but also to generate very good alpha too. But remember as well, everybody, options are literally playing with fire. So treat them with a lot of respect. Paper trade first. Do not play with options so you really know what you're doing, because you have to understand there'll be somebody on the other side of the trade. So if you're buying something, you might be buying it from me. I'm selling it to you. And that means I think the price is going to stay flat or go down if I'm selling you, for example, a call option. So just always remember, think about who is on the other side of the trade. Crypto Tiki Bro, can you do a face-off with Pith versus Band, an oracle that typically was second to Link? I can if it's exciting enough. Face-offs tend to sometimes be very controversial because bipolar go, but I'll have a look. We do have all the data on Band as well, and we now have all the data on Link and Pith. What might be interesting is a high-end metric face-off of everybody in the category and do it across things like lenders and oracles, etc. And just to say which one has the most bang for the buck. The idea just popped in my head. The T, thank you so much for being here. And thank you as well to everybody, AC1, Sir Winston, Forrest M, Long-Term Holder, Crypto Convert, InfoSeeker, KN, Salem 103, Kiwi Robin, Colton Seifert, and DCA is live tomorrow on Ivan's channel. Pretty sure of that. 7:30 a.m. Pacific, 4:30 Central European time. And I'll see you all there. Thank you all so much for coming. And let me see if I have this. Yes, I do. Wow. Over 3,000 lovely people watching live. Thank you for the support, and hit the like on the way. I'm going to try to do something never done before. Let me see if I can get this to work. And of course it didn't work. Wonderful. Oh, I know. Maybe try this. Here I am experimenting live. Yeah, hit the like. That worked. That was fun. Anyway, thank you all. See you all tomorrow. Bye bye.